What's up, guys? This is the Broke Executive, and on today's video, I'm going to be explaining how I diversified my Robinhood portfolio and allowed myself to get into many different sectors to be able to better mitigate risk and just set up my portfolio in a much more professional way to set myself up for success in the long term. So without further ado, let's just jump right in. So diversification within your portfolio is when you enlarge or vary the amount of positions you have in order to better set yourself up for less risk by taking on additional positions in order to better mitigate types of risk. So you can see the definitions right over here on my shoulder. And really what this boils down to is the concept of not putting all of your eggs in one basket. So you can see by being able to spread out where you put your money, you're less at risk of losing all of your money at once. Now, this isn't a bulletproof plan. It is possible you could lose all your money, but statistically speaking, you're a lot less likely to have this happen to you if you are spreading out where you put your money. This would be buying 3 different companies instead of one company. So instead of putting all of your money into Tesla, you could buy Tesla, Apple, Nikola if you really wanted to, but that's not looking like a sound investment right now due to the whole fraud thing. But if you put all of your money in Nikola, you might be down quite a bit, or if you had just a little bit of money in Nikola, but you also owned other companies, then you'd be much better set up for success in the future. Diversifying your portfolio can be as easy as buying several different companies, or you can break it down by what industry those companies are in. So you can look at different sectors, like technology or consumer goods, stuff like that. So being able to put your money in these different baskets will set you up to have a much more broad market account and better spread out across the entire stock market. The official stock market sectors are shown right here over my shoulder. They vary across the board. You don't necessarily have to have all of them. You don't have to have specific ones if you don't want. I tend to use a slightly different variation of the sectors. Like I don't have energy, I don't have utilities, and then I combine consumer staples and consumer discretionary funds into just one sector just because in terms of dividend investing, you don't have that many different companies within both sectors. So I found it was a little easier to just combine it into one sector. So there are 11 official sectors. You can see them right here over my shoulder, but I don't necessarily invest in every single one, and I've kind of created my own sectors within that as well. So one of the sectors I have is transportation. That'd be like my Delta Airlines and my Union Pacific stocks. That doesn't show up as a specific sector on this pie chart. However, I felt within dividend investing, it was an important sector and part of a specific industry that I wanted to be a part of. Here you can see my sectors. You recognize this chart, which I can lean on the way up right here. This is the chart you saw in my previous video where I was kind of talking about different companies I'm invested in and really what I was looking forward in the future to, as well as over here you can see the pie chart showing how my portfolio is actually broken down, and it's a little easier to see at a quick glance, whereas the chart above me, it's more if you're looking at the technicals, trying to figure out exactly what percentages you're at, how much money is in each sector, just to kind of better set myself up to be able to see the stats and the data behind it. But primarily I use this pie chart right here just to kind of glance at it. Now you will notice I have ETFs, which is in a sector as well. But that's because when my portfolio was smaller, I was using those ETFs to diversify myself by buying a single stock that owns many companies. And I have talked about this in a previous video, which will probably be linked right up above me in a little card. Feel free to check that one out if you want to see more about why ETFs, as well as how they can help grow your small portfolio. So if we were to flip over to this pie chart, which you can see it's an older pie chart, it's from in March, which I can lean out of the way of this one as well, just so you can kind of see. This is when my account was smaller. I only had about $1,100 to $1,400 in the account at the time. This is right when I was buying that Delta Airlines initially and for the second time. You can see I had a lot more money in ETFs. That's because the account was smaller, and since then I've grown into buying individual companies because my confidence in being able to look at companies and research companies and be able to choose which ones were better suited for me just kind of grew over time, and I became more confident with it. But this is a perfectly acceptable way to diversify your account because, again, those ETFs do own many companies, as well as you can target specific things like dividend investing, as I have talked about in the past. Now, as I've mentioned before, this pie chart right here is from when I just owned Delta Airlines. I have since bought Union Pacific, which has further diversified my sector itself into multiple categories, as well as I have mentioned in the past in another video about how I own multiple ETFs to allow diversification there. So you can diversify within these sectors, and I am going to show you guys a breakdown of 3 of my sectors and just the companies I have and how I kind of diversify the money within them. Right here you can kind of see how I have my individual sectors broken down primarily. You can see the ETFs, that's the big one, because this one kind of shows the best of kind of what I was talking about with that diversification. As well as above me, you can see I have industrials and transportation. You can see those are also broken down differently. And it kind of comes to how much do I like each company, what their dividends do, and how they grow in terms of how I actually break down my sectors for what percentage of my sector I want to be certain amounts. So again, looking over at these ETFs, you can see primarily I have the most in VTI and VOO. I have talked about these ETFs in the past. Again, I can link back to that ETF video. I'll probably put the link in the description as well. But you can see I also have those 3 dividend companies that I also am invested in. And you can see how I have it broken down. Being able to separate your sectors and actually choose. Again, this doesn't have to be perfect 50-50s like transportation is. You can have it kind of wonkily balanced like my ETFs are. But the 2 above me, you can see, are fairly even split. That's because I don't have a huge preference over a certain company, or I just happen to own such a large position in the company that I haven't been able to properly balance the sector as I like. This is something that's ongoing. It's kind of a live chart, and every time I buy stocks, every time I open the spreadsheet that I track all this stuff in, it changes because stock prices change and everything kind of fluctuates. So obviously these aren't hard percentages that are always going to be like that. As well as I grow my account and I'm able to better set it up the way I want, I'll be able to better diversify myself. So again, with the transportation right up here, you can see I own Delta Airlines and Pacific, as well as there's the third, Norfolk Southern. That's another stock and company I want to be getting into. And then from there, I'll be able to shrink my relative size and position of Delta Airlines down to something I'm much more comfortable with. Right now, I do feel it's a little large, but I have talked in my previous video about why I own Delta Airlines, how much I own, and kind of the whole story of why I still own it, especially because they've cut their dividend. Owning so much Delta Airlines, to me, I feel is a bit high of my risk tolerance. Delta Airlines, I don't think is a bad company. It's just in the terms of their dividend and how they don't have one, and how I primarily focus on dividend investing and dividend growth investing. This is a company that I'd like to shrink my position in to better mitigate my risk and better earn dividends in the short term as well as in the long term. So I have mentioned in previous videos, I would like to go and do a little deep dive of all of these sectors and what companies I own, what percent allocation within my portfolio I would like them to be. And if there's certain sectors you would like to see me explain and kind of do a deep dive in first, let me know. Otherwise, I can just slowly crank through them. This will probably be going on between other videos I have planned, like how at the first of the month I'm always going to be doing portfolio reviews, as well as I would like to start getting into the reviews of other people's portfolios. So if you do have a portfolio that you wouldn't mind me taking a peek at and just kind of doing a compare and contrast and explaining why maybe I don't own the company you do, or how I think you have some great investment strategies and companies that maybe I should be getting into, I'd love to be able to do that. I do have 1 or 2 people I've kind of already hinted at wanting to do that too. But by all means, if you would like to share your portfolio, do let me know. And again, if there is a sector you want to see me do first, please drop in the comments below which one you would like to see, and I'll be able to start creating what you guys would like. So make sure you're subscribed to be able to see that stuff in the future. On the topic of risk and risk management, again, buying certain companies and how much money you put into certain companies will change how your portfolio performs, as well as you can kind of set yourself up for certain results. So if you really like that roller coaster ride, like right here, I personally was not a fan of this whole thing and how it disappears into my shoulder. That was a very stressful couple months for me. Maybe you like that roller coaster ride. Maybe you're from Wall Street Bets and you're looking for, the next absolute rager of a stock like Nikola, and how it's fucked up and dropped down and fucked up, and now they have a truck that apparently just rolls down the hill. Although they do claim they do have a running model, but that video hasn't been shown yet. You can look more into that. It's kind of a funny story. Being able to better avoid these kind of roller coasters, which this one wasn't my fault, it's just how the market was behaving and the whole thing with March and the mask. And however, choosing to mitigate risk can better set yourself up for a better long-term safe future, because you don't necessarily have to rely on superior results from specific companies in order to match or beat the market. Being able to be invested in the market and just being the market can really help, especially small accounts, feel much more confident in what they're doing, because you're not watching these wild fluctuations. Being able to just watch, modest 1 to 2% returns that are consistent really promotes confidence within what you're doing to show that you're doing it right and can really help you grow that account over time. I've kind of touched on it in the past in some of my old videos, how I initially opened this account within Robinhood to try to do penny trading and make money, and that whole thing didn't happen. And as of Wednesday this coming week, so on the 23rd, we'll officially hit 1 year of dividend investing since I bought my first company. So I'm thinking next week I'm going to talk about some of the best investments I've done, which probably won't be the most surprising companies or ETFs. However, you will be able to see how choosing boring companies or companies that are known for good results over the long term can really help set you up and diversify your account and really just solidify in long-term success. If you guys would like to begin your dividend investing and be able to start with a leg up in terms of diversifying, you can sign up for Robinhood, get one free stock that automatically a sector you are already a part of for free, or you can sign up for Webull, get 2 free stocks, one when you open the account, and the second one when you fund your account up to $100. That second stock could be worth up to $1,600, and that could really help jumpstart you in terms of diversifying your account, because within that $1,600, you can easily be a part of multiple different sectors, or keep it in one sector with the one stock you happen to get. By all means, this is kind of a pick and choose. It comes down to what you would like. So don't feel bad being a part of one sector with a lot of money in it if you happen to luck out and get that $1,600 stock. One last time, I'm going to have to remind you guys to like and subscribe to this video, because I would like to start creating videos that you would like to see. So again, comment down below which sectors you'd like to see, or if there's a certain type of video you want to see where I kind of can deep dive into a certain topic in the future, as well as if you do want to share your thoughts, share your portfolios, you can hop over to the Broke Executive subreddit. I will leave that linked in the description. With that, I'll see you executives in the next video.